Whew. I think this Lancaster Connects episode is just going to be a banger. Yeah, hey. So it is not the usual case of the Mondays around here at Lancaster Connects. It is Monday at 2:00, and we're back with a wonderful guest. A little shift in focus with our business guest, too, this week.
I'm looking forward to it.
Yeah. Ben, in the little warm-up there, was saying we need to, clap.
Learn the intro. There's no words, but we can do there's a bunch of clapping.
He was, slapping his chest and his thigh.
And figure it out.
I'm like, what is happening here? And then
it's very exciting.
Yeah, Holly's like in Pitch Perfect. I'm like, oh, the Cup song. Right. And we came full circle in the moment. So now that you're with us, let's settle into Lancaster Connects.
Wow. Love that transition.
How about that? Oh my goodness. See?
On the phone.
Everybody's already loving the vibe of it. We love the vibe.
Hello?
Yeah.
Hello?
We forgot to take the phones out of the office. So should we
bring the customer onto the show?
Yeah. Dial them in.
How you doing?
All right. Well, listen, we're going to jump in. I usually bring you right out of the top of the show here. Lancaster Connects, brought to you from the Gardener's Mattress & More Lancaster Connect studio. My mattress tip. And, it's March, and I've come to the realization that a new mattress should not keep you up at night thinking about a new mattress, nor should poor sleep. And there's a ton of great study and great science that says a great sleep environment and a great mattress can help you sleep, reduce stress. There's a lot of stress in this world, maybe a lot of stress in your life, and we don't want that to happen. And so Ben and I have revamped how that can work for you investing in a new mattress. We have our Sign, Sleep, and Dream promotion. And so this is where you get to take home a brand new mattress with your good credit and just your signature. That's it. Low monthly investment, probably less than your Netflix and Hulu subscription and cell phone bill combined. So something very easy to manage. It's fast, free, and easy. No interest financing. Terms 36, 48, 60 months if you want. So you can get home an incredible new mattress, impact your sleep, wake up happy, and kind of go to bed and let the stress of the world wash away. And so we've revamped that to make it very affordable for you. And if you go to, look at that. See, this is why you have a pro in your corner. We've got pros in our delivery truck. We've got pros in our store to help fit you for a mattress. We've got a pro of our podcast producer, Chris Stone, who brought up Sign, Sleep, and Dream right there for you.
I think it's safe to say first-rate producer.
He is a first-rate producer. And we revamped that offer for you to make it very affordable, and you get to wipe the stress away in your life. Go to bed to that sanctuary. And that's my tip. Look for stores that make it easy for you to buy. We certainly do, with fast, free, and easy financing. So you can reach out to us. Maybe that's what that phone call was about. They were reading my mind.
I think you're right.
Yeah, I think the next one will be for sure. But anyway, that's my mattress tip for you this week.
Nicely done. We're joined this morning this afternoon. It's like after lunch. What am I thinking?
Ben's got a case of the Monday.
Oh, my goodness. It's always morning.
What day is it?
Yeah. So Holly Lyle is our small business guest today. Holly, we've known each other for probably almost 8, 9, 10 years. We were
been a while.
Referral group together for
been a long time.
Years.
Mm-hmm. Yeah.
Obviously, we know a little bit about what you do, but your guests, our watchers and listeners don't. So we'll jump in there. But we do have one piece of business before we get into who you are and what you do. I think you're ready for it. It is, Chris, pull up the wheel here.
Very exciting.
These are discounts or rewards, I guess, for being watchers or listeners of Lancaster Connects here.
Is it time yet?
Whatever it lands on is the special for this week for Lancaster Connects watchers and listeners. Yeah, Holly, when you're ready.
That was the longest way to describe. Our guest is going to let you spin the wheel for discounts, listeners and watchers.
Okay, ready?
Yep.
Ready? I'm so excited. Spin the wheel.
Yes.
That was fantastic. Did you feel the energy?
Yeah.
See, so we have professionals in your home.
Yeah.
Professionals in our store, professionals producing our show, and the best spin the wheel ever.
Right.
And boom, look at that. Discount.
$100. Is that the best one?
It's one of them.
It's
really,
it's up there. It's up.
See?
Yeah.
I mean, that's a real
very exciting
on a real
congratulations.
Great sleep. So yeah, $100. Just come in to Gardener's Mattress & More, 830 Plaza Boulevard, right here behind Park City Mall. Mention that you saw the wheel spin on Lancaster Connects, and you'll get $100 off any purchase over $4.99 or more.
And that's stacked on top of any other offer we have.
Correct.
Because you're special. You're a watcher and listener of our show. And Holly gave it to you.
Yeah, that's me. Holly Lyle.
Love it.
Gave it to you.
All right, Holly. So
somebody's like, give me my $100.
They're calling right now. They're like, let me have it.
That was quick.
It was.
It's very impressive.
Look, we're in the information speed technology age.
Mm-hmm.
People are dialed into our show.
Making things happen.
Yeah.
We're soon going to have a neurotransmitter that dials in from Lancaster Connect's 2:00 download because it's worth it. It's worth it, Lancaster. Holly Lyle, why don't you introduce yourself and tell our listeners and watchers all about who you are and what you do.
Great. Thanks so much for having me, guys.
Great.
It's so fun to see you. I'm Holly Lyle. I am a residential mortgage lender. I help individuals understand their financing options. I've been licensed for 35 years helping individuals with their financing. If you can't pay cash for your home, then you need someone like me to explain to you how to go through that homeownership financing journey. And so I love educating clients and to help them understand how to, what product would work best for them and making sure that they're comfortable with their payments and taking them all the way through the loan process to the home.
Yeah. Yeah. And it's a lot more than just interest rate and term, isn't it?
Sure is.
Yeah. So we'll dig into that.
It's very emotional.
I'm curious, how did you get into the mortgage lending business?
Just kind of fell into it.
Okay.
I literally did not know how to spell mortgage.
Okay.
I was 21 years old and I needed a full-time job, and my friend worked at a bank and I said, you got to get me in this bank. I need a full-time job with benefits.
Wow.
And she said, okay. She said, well, there's this opening in secondary marketing. And I was like, sweet.
I can spell secondary in marketing.
Right. That's cool.
Check.
So I had no idea what that was. I'm thinking marketing. Okay.
Yep.
Marketing. So I go in and it had nothing to do with marketing. Secondary marketing is where the interest rates are set and the mortgages are sold. So it was fascinating. I learned a ton those first couple years, and then the bank got bought out and needed a new position and had the opportunity to apprentice underneath a top loan officer for the bank, a woman in Lancaster. And so that's how I got started. And she taught me all the stuff and things. And I loved it. And I've been in mortgages ever since.
That's awesome. Once
it gets in your blood. I mean, you guys got that way with mattresses. I got that way with mortgages.
Yeah, I couldn't spell mattress either when I started. I forgot that second T all the time. Sometimes there's 3 T's, 1 S. Sometimes 3 S's, 1 T.
I had no idea.
You called it a mattress.
Sometimes it was a mattress and there was an A where there should have been an A. So
I don't even know how people get. I don't know. I never knew it was a thing. Well, it was a long time ago.
Yeah.
Yeah.
Well, there's a reality that something like 8 out of 10 people don't use their college degree in their actual thing that they find in life and they love.
Yep.
And that's not a statement whether college is good or bad. It's just a statement that's true.
Right.
But yeah, in life, we often just kind of fall into things. And I think you fall in love with it because you found a way where you serve people at a high level and love doing it.
Yes.
On like one of their most important financial assets and things in their life, their home.
Mm.
Yep.
And you've got a heart for that. So that's great. We'll dig into more of that. Over 35 years, what's the highest interest rate that you've seen in your 35 years of time?
Like 10.
10?
Yeah. When I first got in the business, they were double digit, like 10. But then ever since then,
They've come down. But home prices have also gone up.
Oh, yeah.
So we'll talk about that.
Absolutely.
Talk about that. Yep. So let's jump in because before we go in, I want to just kind of share were you jumping?
Yeah, I was.
Because I was kind of looking that way for a moment. It's hard. All the angles. Lancaster, we're taking a new direction with great guests like Holly. We're going to bring you people we trust, right? So I started out with our tip that, hey, we got a professional bringing up the Sign Sleep Dream opportunity for you to invest in a new mattress. We got professionals in your home. We're only going to bring you trusted, and we've only brought you trusted business guests before, but it's really important with what I'm going to say now. So this episode is all about smart mortgage planning right here in Lancaster. So we're going to bring you a Lancaster professional. We're going to bring you a Lancaster professional we trust. Obviously, if you choose to do business with Holly, that's going to be between you and Holly. You'll have to do your due diligence, but you can trust Holly and you'll get to know Holly, and you'll do that when you interview and work with her for a future mortgage. But we want to build a great library of helpful content from great trusted business professionals to help your life, to serve you at a higher level, because we're involved in your home, but we want everything in your home to be great. And so it'll be great people like that we bring to you. In the home, outside of the home, in your life, all facets of your life. So that's where we're going with business guests from here on out.
Love it.
Yep. So Holly, with that said, what is one of the biggest mortgage myths you hear from people that just won't go away?
People thinking that they have to have 20% down payment.
That's a big one.
It's huge. People are like, I don't have enough money.
Yeah, I don't have 80 grand because 20% of a $500,000 home is $100,000.
Right.
$400,000 home is 80 grand.
Right. $300,000 home, 60 grand.
Yeah.
Yeah.
It's a large chunk.
We can do 20% commission math here real quick here.
Yeah. Math experts.
So why is that?
I guess there was a period of time in history, I think, when you needed to have 20% down, it was 20% down, shorter periods, shorter terms, whereas over the years, it's evolved and to come up with ways to help buyers get in with less money. Some people just, I don't know. I guess it depends on who they're talking to, hearing these, this is what I did, or this was my experience. A lot of people go back on that, instead of delving into the actual conversation.
So is it still true for loan to value, though, you want to have that 20% number for private mortgage insurance? Is that still a reality?
Mm-hmm. Yes. If you purchase a home and you put less than 20% down, you do have to pay private mortgage insurance, which protects the lender. So it's not life insurance or disability insurance, but it does allow you can buy a home with less than 20% down. And the cost of that mortgage insurance is going to be dependent on your qualifications, your specific profile. So that's where credit comes into play. Price range, mortgage program, different mortgage programs have different mortgage insurance costs. And there are certain mortgage programs. There's one in particular, the VA program for veterans.
Yep.
That particular program does not have a monthly mortgage insurance premium. They have what they call a funding fee, which is the funding fee is based on the veterans the specific veterans qualifications. So if they're a first-time user, it's like 2.15%. If they've used their VA eligibility previously to purchase a home, it will be higher. If they were a reservist, it would be a different amount. If a veteran is 100% disabled, they don't have any funding fee. So those sorts of things impact what type of mortgage insurance, the program, the credit score, those things all affect different mortgage insurance amounts. And whether or not you can get rid of them.
Right.
Like conventional financing, you can, when you get to the point where you have 20% equity, you can then try to get rid of the mortgage insurance.
Right.
Yeah, that's a goal to work towards.
Yes. That's why you want to get in and start building equity on something, because you're always paying someone's mortgage. It's just, are you paying your own or your landlord's?
Wow.
That's a good point.
Yeah.
Right?
It's a great way to think about it.
Who owns the equity?
Exactly.
I thought you might say for a myth, one of the myths I've always thought is that you need to have perfect credit
Oh, yeah.
to purchase a home.
Right.
So that might be keeping some people away from, the deposit, the 20% down, and thinking that maybe my credit isn't good enough. Can you talk a little bit about
Absolutely.
that?
Yeah. So you do not have to have perfect credit. I mean, the better your credit score is, the more opportunities, different programs would be available, better terms, meaning
Right.
More
credit
favorable
scores,
rates.
right? More favorable interest rates. But I mean, depending on your entire profile, your credit score is the first thing we talk about and we look at. And I mean, there are programs where you can do it with as little as a credit score of 580.
Right.
Oh, wow.
Right.
It's
The answer is not no.
It's not no.
Right.
It depends on your whole profile. And that's the key. You can't make assumptions. You can't have conversations with people. Well, my Uncle Joe did this or my neighbor did that. It's very specific to your profile. What's your credit score? What's
Your income.
your income?
What are your other existing debts
Exactly.
and liabilities?
And how much money do you have? Where is it coming from?
Right.
All of those things go into it. But we do look at credit first. We do initial consultation. I do a soft credit pull. So I'll pull just 2 credit scores. And the soft pull means I'm not hurting your credit score. No one knows I pulled your credit. It doesn't show up as a hard inquiry. And it gives me sufficient information to figure out what you could possibly do. And that's a great first place to start, and then once we go through that initial consultation and I say, okay, these are your scores, then your credit score is going to impact the programs that you could use, and it will affect the interest rate.
Right.
Yep.
Yeah.
I do want to bring a credit repair specialist on here, so I'm going to get with Holly after the show and have her refer us one that she trusts. But credit has been one of these things that is like my personal love affair.
Yeah.
And I know that right here is a tip for you. So if you're hearing this show and you're liking what Holly's sharing and you're thinking I might reach out to Holly, I already know I'm kind of in that 580 to 620 range. On-time payments comprises 35% of your weighted credit score.
Yep.
So if you're a little not as diligent, do that right now.
Yep.
So you're still paying your bills. It's just you're not committing to the due date. Commit to the due date. It's no extra money.
Right.
You're still paying your bills.
Right.
It's just you're more focused on your bills.
Yep.
It's going to take some time for that to repair.
Yep. Pay on time all the time.
Yeah.
That's a huge part of it. The other big piece of your credit is what do you have available versus how much are you using? What's your utilization? The age of your credit.
Yep.
Like I always say to young people when I speak to them, well, you're just getting started. You're just creating credit. Everything you're doing looks really good. Or I'll say, you're maxing out your credit cards, which is not a good thing.
No.
You want the utilization percentage, you should keep under 30%. That's your sweet spot.
Yep.
And it's okay for you you need to have, I call it a necessary evil. You need to have credit and you need to show the bureaus the ability to use it sparingly and responsibly. Pay it on time all the time. Keep your utilization low.
Yep.
You don't have to go into debt. You don't have to pay interest.
Right.
You just have to have it available.
Yep.
And every year I speak to several people who are like, I hate credit. I don't use credit. And I try to explain to them, you don't have to pay interest. You just need to keep them open. You could use them a couple times a year.
Yeah. Yep.
Just keep it open and alive, and they're going to increase your limit, and that's okay. You don't have to use it. I have a credit card I've had for 30 years. That's really good for my credit profile.
Yeah, because that's one of the other metrics in credit is your credit mix and age.
Yep.
So you're probably sensing you're getting more than just somebody who can push mortgage documents across the desk on signing day with Holly. You're getting somebody who's pretty darn knowledgeable about the whole process. Let's jump into, you said you're always paying somebody's mortgage.
Yeah.
Your own or your landlord.
Mm-hmm.
Yeah.
And some people think renting is safer than buying in today's market. And look, Lancaster we were on with our mentor this morning, and he was talking about in their market where housing is starting to depress in price.
Mm-hmm. Where is he?
So southeast.
Okay. Yeah.
Okay.
Yeah.
And he kind of shared something with us. And again, I'm not a real estate professional, but we talk to a lot of smart people in our day and in our time. And he said the way it kind of goes across the map, kind of starts out west, comes southeast, pushes back Midwest, and then comes back up northeast.
Mm-hmm.
Is that what your knowledge?
The last. Yeah.
Okay, there we go.
We are still in a very hot market.
Yep.
Where we live,
Mm-hmm.
and surrounding areas still very, very hot. We just don't have enough inventory.
Right.
We have older inventory. We don't have a lot of new construction.
Yeah.
So it's still very competitive in our market.
Yeah.
So those people that feel it's safer to rent than buy a home, what would you say to those people?
I mean, I always say it's definitely an individual thing, right?
Yeah.
Homeownership's not for everyone.
Okay.
But you have to have the conversation. You have to understand it. If you're, it's a commitment, right? Purchasing a home is a commitment. You're making a commitment. It's not a short-term sort of investment. It's a long-term investment. So you have to go into it. I mean, if it's something where you're like, oh, I'm probably going to relocate, I'm young, I don't know where I'm going to end up,
Mm-hmm.
then maybe you don't want to do it.
Yeah.
Maybe you don't want to talk about it.
Yeah, renting would probably, if you're going to be every 2-3 years relocating, moving, probably does make sense to rent.
Yeah.
Until you plant your roots somewhere.
Exactly. But the other piece of it is safer. I wouldn't say that at all. I wish I would keep track annually of the number of times I get a phone call from individuals that say, my landlord has decided to sell the house.
Mm.
And I have 60 days to get out.
Which is, in the grand scheme of things, it's not that long of a time.
It's
right.
not.
It was just Christmas.
Yeah. Because
right. Right.
Yeah. A tight housing market means a tight renting market.
Right.
Yeah.
Folks, the reality is, we'll kind of dig into this a little bit. Because while we're in a commercial building, there's realities that commercial shares with residential, and that's taxes and insurance. Our taxes here at Gardner's Mattress and More to the city of Lancaster is $37,000 a year. Just that number. Yeah, right. Yeah. Holly Bell fell over a chair. And it goes up about 8% in total each year.
That's crazy.
Is about what maybe 5, but it goes up. It certainly goes up every year.
Not going down.
Insurance doesn't go down. It goes up every year. And so
true.
This is I'm not going to apologize or make excuses or prop up landlords. I'm just going to make a statement of fact. A good landlord understands their costs. A good landlord understands what their profit needs to be so they can maintain their properties in good condition for you to rent, which means as their property taxes go up, as their insurance goes up every year, which they don't control, contrary to some who think landlords are scum of the earth, they don't control local policy on state, they don't control on taxes, and they don't control the state insurance agencies on what they set rates at or nationally. Mm-hmm. They just have to pay the bill like we do, like you do with your car and homeowners. And so those inputs into your rent are for the good ones who understand their business. That's what can drive rental increases. Mm-hmm. It's just the reality of the matter. And so renting can be good, and then it can be rougher.
Exactly. And I mean, it's, again, I'm going to go back to commitment. I was thinking about this topic a lot, and I mean, really goes back to commitment. Like when you're renting, it's not yours. You can't paint it any color you want, right? Without permission.
Yeah.
You can't, maybe you want a garden. Maybe you can't do that because you don't have your own
Can't
property.
dig up the ground.
Right.
Yep.
I mean, it just, if you're looking for stability and planting roots and being a part of the community, right? Purchasing a home and taking care of it and making it your own, is just a part of a commitment of stability.
So that sounds like an assessment, right? Just kind of think about, what do your roots look like?
Yeah.
Do you want that garden? So does that mean you need some land?
Yeah.
If a garden, my wife doesn't want a garden, but I was going to say a garden might equal, I like this whole chicken thing I see on social media. And then I like baby goats. And then I like mini cows.
Yeah. Yeah.
And so my wife likes the baby goats and mini cows, but we can't have those. But if you want them in this little roots assessment of where you want to settle, maybe you want to check out zoning.
Yeah.
To make sure you can have a little chicken coop.
Right. Or maybe, and there's also home ownership options for people that don't want those.
Right.
They don't want to snow and mow.
Right. You
want somebody to take care
of. Snow and mow.
Yeah. Those are like condo communities or planned unit development communities where there's a homeowners association that takes care of certain things that maybe you might not want to take care of.
Yeah. Yeah.
So let's say there's somebody listening, watching out there right now who has questions about their, down payment, who has, they're thinking, they're navigating renting versus owning. They're thinking about their credit score and what might need to be repaired there. What does it look like to have a conversation with you right now, even if they're like not ready to buy a home?
Oh, it's the best. Coming up with that, having that initial consultation, conversation to plan, like to pre-plan is so important. It happens all the time. It's so important to have that conversation and come up with the plan, right? Because then you start thinking about things. Like there are a lot of times where I talk to clients and I'll say, I'm going to tell you what I would qualify you for and how I qualify you. But I want to ask you, where's your comfort level for a mortgage payment? And then we talk about like, what are the 4 pieces to your mortgage payment? There's the principal and interest on your loan, right? The amount of money you're borrowing, amortized, generally speaking, over a 30-year period of time at a fixed interest rate.
Yep.
Then you have 1/12 of the annual real estate taxes, right? Anytime you purchase a piece of real estate, you have real estate taxes. You have 1/12 of your homeowner's insurance, which is fire insurance, hazard insurance, and then possibly mortgage insurance, right? So those are the 4 pieces to your payment. And I'll say, where's your comfort level for that mortgage payment? And it's crazy to me how many times they come back and they go, I don't really thought about that. So that's why that pre-planning, that conversation, have the conversation now. If you want to buy before the end of the year and your lease is not up until, the fall, that's okay. We can talk about it now. Let's talk about it now. Right. Let's figure out where's your comfort level? What do you qualify for? Right? Yeah. How much money do you have? Where is your credit score? Are there certain things you can do to pop your credit score up a little bit? Maybe that would give you a little more, a little better interest rate. Or, is there some debt maybe that we could pay down so that you'd be a little more comfortable in a different, payment range? And then having that initial conversation and knowing what to expect.
Right.
And then saying, okay, so if you want your payment to be $2,500, then you're going to need to be around $350 to $375. Right. So then if you want to go out to open houses and see what kind of homes are out there, if you're not ready to really make offers, you don't want to take up the time of a real estate agent or anything like that. But you can, wander around open houses. They happen every weekend.
Well, and I think what I take away from what you just shared there is you're saying an approximate $2,500 mortgage payment with all those other 4 things included.
Yep.
it equates to about a 375 house.
Depending on the taxes.
Yeah, I mean, there's a lot of inputs, but that's
Sure.
the ballpark. I think what I hear there is know those numbers. So in your home buying process, you're not frustrating yourself. I love this house, but it's $550.
Right.
And that $2,500 number just isn't comfortable or movable.
Right.
I think you can really frustrate yourself because, we are in a strong hot market still.
Yep.
And it's competitive.
Yes.
And that competition can lead to frustration and disappointment.
100%. You have to go in knowing what you want, how much you need, what do you qualify for, and you have to be prepared to go in at your highest and best immediately.
And that's what you can help them with this initial consultation.
Yes.
Is there any cost to that consultation
No.
with you? And is there any commitment
Free.
that the potential home buyer is making to you or to the company you work for or
No.
anything like that? So it's really
my
everybody
goal is to provide you with that education,
right,
create a relationship with you, right? Earn your trust so that you want to work with me. Right? That's what I'm doing.
That's what you do.
Yeah. So there's no reason for somebody to delay that conversation.
No.
If they have the thought of maybe is home buying an option for me.
Yeah. You've decided.
I know looking at the homes is the fun part.
Right.
I do. I get it. That's what everybody wants to do.
Yeah.
But you gotta take the first step and have the important conversation and make sure you're prepared. Right? You gotta do the work, do the hard stuff, and then you can have fun.
Yeah.
Right?
Yeah.
Looking at homes and
Well, I think our fans know I'm a big football fan here. You're kind of like the offensive coordinator.
there you go.
The couple, the home buyer is the quarterback.
Right.
They're in charge.
Yeah.
Right.
Yep.
Head coach is maybe mom and dad,
Yeah.
uncle giving some insights, whatever. You're the offensive coordinator. You put the game plan together to go attack and win the game and get the house bid and won.
Yeah.
And
I set you up so that when your realtor is making offers, you have a strong offer, a strong commitment letter. And that's the other piece too. There's credit's a huge part of it, but then the other big piece of it is what's your employment and income profile look like, right? Because here's a perfect example. I have a young couple that I spoke to, and he's been at his job for 5 years. He's salaried. He's easy, right?
Right. A lot of stability. We use gross monthly income before taxes come out. So he makes this much money a year divided by 12. That's how much income we can use. She has 2 part-time jobs, both under a year. Yep.
So
kudos for working.
Right.
Kudos for not just sitting at home.
Right. But the underwriting guidelines, which is what, I have to adhere to all these different guidelines, all these different requirements. So I have to look at that full picture and I have to say to her, I can't use any of your income to qualify you.
Because it's not full-time.
Right.
Even though it might equate to more than full-time hours.
Exactly. Because she doesn't have a history of working two jobs. And she doesn't have a 2-year history at the same. If you're part-time, you have to be at the same place for 2 years.
Okay. That's another big takeaway right there. So if part-time is what your situation, family, relationship needs for a multitude, maybe daycare, maybe you're taking care of a parent. Okay. Set yourself up to win.
Yep.
And maybe just understand, okay, I got to rent for 9 more months.
Right.
Or whatever that is.
Exactly.
Okay.
Or if you, I talked to another client who was salaried, changed positions within the same company, and is now 100% commission. Okay.
Big change.
How many years does Harold and underwriting want to see for that?
2 years.
2 years. Heralds. I call them heralds.
Yeah. I know. We put them in a corner
right,
with a little light.
With the underwriters.
And they're looking at the paperwork. you know.
See, Holly protects you. Holly protects you from
Yes.
Herald and underwriting.
Yes.
Herald and underwriting is like a dentist exam, a proctology exam, a grammar test, a punctuation test.
Wait, who is the
all in one. That's
who
what
was the
underwriting
office
is.
manager in Monsters? What was her name?
Oh,
Yeah, where she was always talking about the paperwork.
he sounded like
Come on, what was her name? Where's her
Chris.
picture? We need her picture.
Chris.
We'll find it.
We'll come back.
Yes.
Okay. So yes, underwriters.
Underwriters
Yes.
are
There's
like,
all these specific guidelines. So, you know, that client needed a history.
but Holly did tell me she loves the underwriters at New American Funding. These are other
Too.
underwriters.
Right. Yeah. People, you know, a long time ago, not current. Current underwriter. Oh, wait,
Right.
wait.
Yeah, you're in
Art.
love. Yeah.
Yeah.
We love each other. The new thing is the kids do this. They snap their fingers and that makes like a little heart thing.
Oh,
Yeah. My son and his girlfriend, they've
I didn't.
Huh.
Never seen that.
I don't know. Maybe maybe that's their schmoopy thing. I don't know. Here's the point.
there she is.
Yeah.
Yes.
What's her name? Roz.
Harold and Rob.
Mhm. Yeah.
First rate stuff. Right there. Right in front of me.
But here's the point. Here's the point in this tomfoolery section. Great people like Holly know what their underwriting team looks for.
Yes.
That part-time 2-year thing.
Yep.
Oh, we just switched from salary to commission. Okay.
Yeah.
It might push our timeline back. You did that 10 months ago. Fantastic. We got a little bit of credit work to do yet. And we were going to need that 2-3 months to that improve anyway.
Yep.
We can keep moving forward.
Yep.
Don't make another change in pay.
Right. Or the ones that are newly self-employed.
Mm-hmm.
Another big thing.
Mhm.
You know, if you had been a W-2 employee and now you've decided to go into your own business, it's a totally different profile. Again,
Yep.
2-year history. And then let's talk about the self-employed borrower or the 1099 borrower, you know, who has to file as self-employed when they, you know, write off, like they take a lot of write-offs, right?
Yeah, so they showed
So
no
they have
income.
to pay less taxes. So yeah, so then you show no income. So then that's a totally different type of profile, totally different type of client. And there are mortgage programs for those types of clients. They're called non-qualified mortgages or non-QM, you'll hear in the mortgage world. But so there's a lot like, and the coolest thing about what I do, and I think the reason I've been doing it as long as I'm doing it is because every client I talk to is different, right?
Yeah, it's not
Every
cookie
story is different.
Yep.
Every situation, you know, no one has the same credit profile, the same employment. I mean, I hear about jobs that I'm like, huh, I didn't even know that was a thing, you know, or, yeah, it's so fun to like talk to different people and hear about all the, you know, different things they're doing and looking at their entire profile to figure out how to it's like a puzzle.
Sure.
Every client's a puzzle.
You're there to put it together.
Right.
Help
put it
the
together.
client put it together. Yeah.
Yeah.
offensive coordinator.
Yeah. Yeah.
Yeah.
You know, across 35 years of history, so you've seen a lot of these interesting situations, a lot of these different situations.
Mm-hmm.
So as you're somebody looking to work with a mortgage lender, and you know, we deal with this with business banking. You know, banking is becoming more algorithmic. Big banks are cutting down on personnel and relationship. Relationship, personality, personnel, not 1-800 who cares,
Right.
717 Holly Lyle, local connection, dial up. She knows those pitfalls. So, you know, whether you work with Holly or not, I would hope you would, or at least reach out and talk with her as a result of our time here today. Certainly look for tenure, experience, connection. Are they available? Do they respond? What else?
Yes. No, you hit the nail on the head with all of those.
I got 5 for 5.
Yeah.
Okay.
Yeah. It was really good. Availability is huge because with this hot market, you know, inevitably offers are due on Sunday night at 7. House goes on the market Friday, offers are due Sunday night at 7.
Yeah.
If your lender is not available on the weekends.
Mm-hmm.
Yeah. So if your game plan,
Yep.
using this offensive coordinator analogy, if your game plan called for this,
Yep.
but now this house came on the market and requires a little bit of a Hail Mary, little fumble-rooski play.
Yep.
Holly's available.
Yep.
You work with a big bank, big corporate bank. Big corporate banker Fred
They'll
is,
get back to you Monday.
yeah, banker's hours.
Yeah.
And banker's hours aren't even like 9 to 5 anymore. They're like 9 to 4.
Yeah, right.
Really?
Right.
At least my bank is. It sucks. Anyway.
So we talked a little bit about job changes and how that
Yeah.
affects somebody's mortgage, but divorce. There's all kinds of other life changes, right?
Yeah.
Divorce, being a single parent, retirement.
Yep.
Thinking about retirement. How do those types of life changes affect somebody's ability to have a mortgage?
Yeah.
And what conversations should they be having with
Right.
someone like you?
Couples that purchase a home together that are deciding to no longer be together, right? There has to be an equity buyout. Maybe one party is staying in the property, the other party is not. I'm a certified divorce lending specialist, so I can help.
I didn't know that was such a thing.
I didn't know that was a thing.
It's very fancy, isn't it? Yes. There's a little emblem.
Certified Divorce Lending Specialist.
CDLP.
Yeah, tell us more about that.
Yeah. So I'm in a network of certified divorce lending professionals. So if I'm presented with a situation, a divorce situation, or even just an unmarried couple who is, has to split, then I have a network of individuals that I can go to help understand, if there's a situation that I haven't run into before.
So that would involve legalities.
Correct.
Names on deeds and titles.
Right. Yep.
All of that stuff.
And when, and divorce specifically, was who wants to keep the property? Do they qualify to keep the property? Do they have to, refinance to take the other individual off the loan? Or do they have an assumable mortgage where maybe they can assume the mortgage so to release the other owner? I can help them figure all of those things out.
In that scenario, there's the human element and the emotional element.
Oof.
In part of that network, is there somebody that can mediate emotions and feelings?
I mean, I do know mediators.
Yeah.
Yeah. I know. I have a couple connections with divorce attorneys and mediators that I can refer people to.
Or do you kind of serve as that little bit of a go-between as best you can do with your skill set?
Right.
Without wanting to be a marriage and divorce counselor.
Exactly.
Yeah. I mean, let's be real. Holly is a mortgage broker.
Right.
But as a CDLP, that I would assume just some of that comes with the trade. But of course, if things get really nasty, you would just have to say, this is...
I mean, if it's an amicable...
Y'all need to fix yourself.
Yeah. If it's an amicable situation and that happens...
Yeah, be adults here.
Right. If it's amicable, I have helped the party that's staying in the home refinance the home with the equity buyout. And then I've helped the one leaving finance their new home.
Yeah.
And...
so it's really just like the decision of, okay, I'm not going to rent anymore. I want to buy. I want this kind of a home because I see this kind of a future. In a divorce situation, it's like, okay, look, let's try and set emotion aside. What are the goals?
Yep.
You may not like the new goals you're hearing.
Yep.
You may not like the new goals of staying or whatever, but let's be adults and let me, as Holly Lyle, help you achieve them.
Yep.
Is that what?
Exactly.
Yeah.
And they, like in situations like that, like they have to spell out, is there going to be any alimony or child support payments? Does the individual receiving that money need that income to qualify? Do they have it set up correctly?
Yeah.
Because in order to use that type of income, it has to continue for a certain period of time.
I was going to ask, is there a term like the part-time 2-year requirement and then the 1-year requirement on new compensation structure?
Well, it's it depends on the mortgage program, but like they have to show receipt of that type of income for maybe 3 to 6 months.
Okay. Yep.
Is it court ordered? Is it private? Then you need a longer history.
I think the goal of building some good content we're doing. I didn't know any of this stuff existed.
No.
Yeah. Is it going to continue for 3 years? Has to continue for 3 years in order for you to use it. So, and in the retirement part of your question. So it's just speaking to a colleague who has a client who needed their father to co-sign because their income profile was just didn't even work for any of the non-qualifying mortgages. Right. So the father, newly retired, significant savings, and also old enough, over 59 and a half. So able to do like asset dissipation, where you take their total assets and you divide it by 360 months or 240 months and figure out what the income would be, to be able to use his income to help his son purchase property. So that's a case where the son's going to occupy it, the father's a non-occupant.
And that's something the son would know nothing about until they talked with you.
Yeah.
To lay out, we can actually do this and this and this.
Exactly. Yep.
That's awesome.
And it makes sense to keep asking questions, right? I've had clients who come to me second, right? They've spoken to somebody else and they're like, I don't really like that news. Or the realtor will say,
they gave the Roz face.
Yeah. Or the realtor will say, that just doesn't make sense to me.
Right.
Let's get a second opinion, right? If something just doesn't seem right? Like it doesn't make sense to you, if whoever you're speaking to is not giving you clear information, then get a second opinion.
Yeah.
That's not going to hurt either.
Right. Yeah.
Right? It can't hurt to have another conversation. Granted, you may still hear the same thing, but what if you don't? Right? Like this guy heard, well, you don't qualify and your father doesn't qualify, so you can't buy. Well, their realtor was like, I want you to speak to my person.
To the superb Holly Lyle.
Yeah. And, let's do this instead, So you just keep asking questions.
That's great advice. Yeah.
If it doesn't make sense, keep asking questions. Big Bird said that.
Big Bird said a lot of great things.
Yeah. Asking questions is a good way of finding something out.
Love it. Love it. Well, so somebody going through, again, the thought process of buying a home, they probably have heard the term pre-approved.
Yeah.
What does that mean? Does that mean they can buy a house? They kind of can buy a house? What does pre-approved mean?
Yeah. A good pre-approval means they worked with a good local lender who has pulled their credit, reviewed their employment and income documentation, reviewed their asset documentation to prove that they can do what they want to do. And
so you certified that they are
correct,
worthy enough to purchase.
I have done the due diligence to say.
That due diligence includes making Harold and Roz back there in underwriting very happy.
Yep.
Yes. Yes.
So when Holly presents the package to underwriting, when you go to close, when you're in that 2-week clear to close, am I spitting facts here?
You are.
That they don't get like the Roz face and say denied,
right,
or throw you a curveball that you don't want,
right? Because I've looked at everything and I've gone back to Roz, or what was the other guy's name? Harold. Yeah. And said, hey, this is a different scenario. What do you think about this?
Yep.
And then we can spitball it. And, it's the ones that go online, fill out an online application, and then the computer spits out a pre. That's not a pre-approval. That's like a pre-qualification.
Okay.
That's
It's like those credit card offers you get in the mail.
Yes.
It says you're pre-qualified for a credit card.
Mhm.
Right.
At 0%. And then you might do it and you might get approved, but it's like, oh no, you can have a card for $500, pay us, and it's $34.99.
Mm-hmm.
That's very different.
Mm-hmm.
That's very different.
And then the other piece is after you get that pre-approval, it's so important, or when you're in that planning
Mhm.
period and we've come up with a plan, don't change it.
Don't change.
Don't change your job.
Okay. Yeah.
Okay.
Yep.
Don't go buy a new car.
And this is advice you would give.
Absolutely.
Yep.
And
yeah,
in this whole trust loyalty conversation,
yeah,
don't come to Gardeners and finance a new mattress.
right.
Yeah. Yep.
We've actually helped people with that.
Right.
Our team has actually, in conversation with our customers, well, when do you want your new mattress? Well, I'm buying a new home.
Oh no, not
Oh,
now.
did you close on the home?
Yeah.
Right. Holly just had like a little something just tweaked. Like if we had a blood pressure cuff on her, you would have seen it spike. But no, our crew has literally said, "Oh wait, you haven't closed yet." No, we're closing in 2 weeks. That's why we want it delivered in 3 weeks
Mhm.
or on this day.
Mhm.
Yeah.
Okay, we don't want to be the curveball that's going to mess you up.
That is impressive.
So we have actually delayed business to serve our customers at a high.
That's amazing.
So Holly is 100% right. Not that you needed me to validate. your
Well,
position
no,
after
but
35 years.
Yeah.
But no, it's true. I mean, I see so much of this on, I'm a big Reddit fan,
Oh yeah.
the personal finance subreddit.
Okay.
I see this all the time. Those I got approved in Quicken, and now we're in this 2 week period, and my life is a mess because this person who I have never talked to is demanding this, and I try to get back, and I have to talk to a new person that I don't know, and they don't understand. I'm repeating myself. Holly Lyle's clients don't have that problem, do they?
Nope.
From first consult to close, who are they working with?
Me.
Yeah.
I mean, I have people that support, right?
Yeah,
right.
I have support.
And that's the new American funding side. That's the back office.
Correct.
But you're the
Right.
OC on the sidelines with the clipboard and the earphones even. You got
Yeah,
one right now.
I know. It's very, very cool.
And you're
Right.
you're desking it. You're like, yep, we
Yep.
got this, we got that.
What do you mean, Joe switched jobs? We talked about that. I told him not to do that.
Yeah.
Yeah.
Very good. Yeah.
And it's so funny. The young clients, I tell them that, don't do anything. After you buy the house, you can do anything you want. But until then, I need you to contact me with anything financially.
If it's a question, call Holly.
Right. And then they'll call and they'll say, okay, well, like I have a client right now who's like, I'm going to sell my car to Carvana because I don't need a car. I work from home. We already have one car, so we don't need 2 cars. I'm like, okay, that's fine. But if you suddenly deposit $15,000 into your bank account and you give us that bank statement, we're going to want to know where that $15,000 came from.
So as in your process of selling to Carvana, make sure you get a document.
Paperwork.
Be prepared to give me a document.
You got
Or offer letter.
paperwork.
Yeah.
Right.
Harold's and Roz's of the world.
Right.
They love paperwork. And then they might want it, the same paperwork, just said a different way.
Yes.
So be prepared for that.
Yes. Very particular about how
Yeah.
assets are documented. Where's the money coming from? We need to know all of that. And yes, you can get a gift. If you have a really nice blood relative who wants to help you buy your home and they want to give you money, that's perfectly fine. But there is a paper trail.
Yeah.
There's a document that has to be signed. And then we have to show proof that the donor had the funds to give and that you, the buyer, have received the funds.
And you really can't, like I've seen people try to game that one, right? Like,
Oh, yeah.
hey,
Yeah.
I'm going to pay you back, Uncle Joe.
Right, right.
And then you go and present the paperwork for gift to Uncle Joe. And Uncle Joe's like, no, this ain't no gift. This was 10 years
Yeah.
at 5%, Billy.
Yeah.
And now that's a problem.
Yeah.
Right? That's
Yeah.
the kind of stuff Harold and Roz,
Oh.
rightfully so.
And you
Have a real
can't borrow money to borrow money.
Right.
Okay. You cannot borrow money to, cann't take an advance of your credit card.
Yep.
Can't take out a personal loan. Can't do that.
Yep.
Now, you can borrow against your 401k.
Mm.
Okay.
Oh,
So if you have a 401k,
there's a little wrinkle.
yeah.
Talk about
If you have the ability to borrow against your 401k, you can do that.
Pull some cash out for that
right.
down payment.
I'm not telling you to take a hardship withdrawal, right? That's huge penalties and all that jazz. But if you can borrow it, right? That's how I bought my first home. I borrowed money from my 401k. So I just paid myself back with interest.
Yeah.
How cool.
Yeah. That makes sense.
Right?
That's a very cool vehicle.
Yeah.
Can you borrow against a whole life insurance policy?
Yes.
That's cool.
Mm-hmm. I don't think I've ever had anybody do that, but yeah, you could.
Yeah, you could. Well,
yeah.
Yeah. Like
And-
I have those for my sons. I had them when they were very, very young. So,
yeah.
People in the comments, if this comes out in a reel, don't come at me about whole life versus term and all that. Okay. Every financial product has a different purpose, a different goal.
Right.
All right.
Exactly.
So look, I'm happy paying the bill. You're happy not selling it to your people. Kudos for you. Okay. But we just learned I have set my sons up each with a significant vehicle that they could afford to go get a home.
Mm-hmm.
When homes are at all-time highs of price. So I feel vindicated.
Good job. Round of applause.
Yeah. That's interesting. So you can borrow against your 401k,
Yep.
you can borrow against other financial vehicles like a whole life policy. Maybe there's some others out there, but again, talk to a professional
It has to
about
be
what you
a
have.
secure, like you could even, like if you own a vehicle free and clear, right? You can go get a loan on that vehicle. As long as you qualify with that additional debt, right? You can do that.
So if you've got like a classic vehicle,
sure,
that's worth a lot of money.
Yep.
Or even a newer German auto,
right? You
that's
can
worth a lot of money, and you owe it.
You just have to show proof that you sold it, that you owned it, and that you sold it.
So basically, anything you borrow against, what's happening here for those that are wondering, well, how does that make sense for the bank? Well, the bank takes your 401k if you don't pay your house bill.
Right.
Right. If you leave your house and leave them in the lurch, they take a position in your 401k.
Well, no, we take your house.
Yeah.
We only take the house.
Yeah. But they're using that as collateral.
Yeah, sort of. You're borrowing your own money. So if you don't pay it back, right? We don't have anything to do with it.
See, this is why you were the pro. I thought I was smart. Now I'm not vindicated. Now all those people are coming back to me. See, you're so dumb. Left to your own devices for 5 minutes, you'll ruin it.
At all. Oh, there was something else I wanted to say about money. Oh, so let's say you already own a house. This is happening a lot these days. You already own a house. You want to buy the next house, but the market's so hot. It's so difficult to get a house under contract contingent on the sale of your current home.
Yep.
So what are things that you can do, right? I have a bridge loan where I can help you get an equity advance on your current property to buy the next property. And then I don't have to count your current mortgage payment. That's a whole different animal, but it's an option. Or another couple I have right now, they have a lot of equity in their current home. So, and they qualify to carry that mortgage payment plus a home equity payment plus the mortgage payment on the new house. They qualify to carry all of that.
Wow.
Without it being contingent on the sale of the house. And then they can buy the new house. And then the old house, they can list it for sale, right? They'll pay off that first and second. And if they have any money left over, they can recast the new mortgage.
Wow.
So they're they're like driving Miss Daisy driver's seat, just having a great time.
People have a lot of equity.
Yeah.
We have seen incredible appreciation in these last 6 years. So people have significant equity.
Yeah.
There is no one that has purchased in the last, 10 to 12 years who has regretted buying a home.
Yeah,
well, and that's, as we look to wrap up, let's talk about two things.
Yeah.
Timing, your view on timing the market in the air quotes. And then It's March of 2026. What's that timeline right now here in Lancaster for, okay, I've decided to plant roots. I want to get a home. I have good credit. What's that timeline looking like on average right now to get into a home?
It depends.
So I asked the loaded question there.
Really loaded. Depends on how picky you are.
Yeah.
You know what I mean?
Mm-hmm.
Like if you're qualified, you have your pre-approval set and you're working with a realtor and they're taking you out and showing you homes and you're making offers. I mean, you could be in a home in the next, like you could make an offer this weekend and close the end of this month.
Okay.
Yeah.
So let's step it back then. What makes a strong, from your seat? We have you pre-approved, you've worked with Holly, you've got all those little curveball obstacles mitigated.
Yep.
Or gone.
Yep.
Handled. What makes a strong offer in a competitive market?
That's another loaded question. Because
it's only a 1 hour show.
It depends on the seller.
Yeah.
Depends on what's important to the seller. Is it the bottom line? Ultimately, if you're competing, right, you have to go in highest and best. Just got to go in highest and best. If you're not competing, if it's a home that's been on the market for a couple weeks,
Needs
then
some work.
Then you have the ability to negotiate. So it really just.
Can you help people understand? So it's a hard to read situation the seller's in.
Mm-hmm.
Can you help people understand how competitive that situation might be?
I will tell them, I will explain to them all of that. And then ultimately their realtor is going to talk to the listing agent, find out, are there multiple offers? And then there's kind of a process that you have to go through with buyers. When they're first making the offer, you explain all this stuff to them. But ultimately, a lot of times they end up losing one or two, until they really are like, oh, wow. Okay. So I really don't have, I am competing. I don't have a lot of flexibility. So I have to. And in some cases, if you're the only one, I mean, it has gotten a little bit better. I've had more clients in the last year be able to negotiate a little bit. I've even had a couple get contingent offers accepted or get seller assistance, but it's definitely easier to do that in York County or Lebanon County. It's a lot harder in Lancaster County.
Yeah. And talk about timing the market. So I have my thoughts on this right now. There's the whole interest rates have come down, right?
Yep. Low sixes right now versus what we were touching 8s. Getting up there
a year or two ago.
Yeah. High 7s.
So they've come down a bit, but home prices have remained high.
Yep.
There's not a lot of inventory on the market.
Nope.
Are we still about 25% of where normal used to be? Or has it come up a little bit? That's a realtor question, isn't it?
Yeah.
Yeah.
I can say that.
That's a question you could ask your realtor.
Yeah.
Hey, as normal times, you could say pre-COVID.
Yeah.
What's the inventory volume at? That's going to give you an idea of competitive.
They say normal. It's important to, if you have 120 days worth of inventory, I think is considered normal.
Okay.
You'd have to fact check that, but I think that's pretty close. And we're barely 30.
Yeah. So yeah, right. So I mean, there's that 25%.
Yeah.
120 to 30 days. There's 25. We just did the math.
Ta-da!
It wasn't that easy commission math, or 20% math. But timing the market, as I see it, we don't have the building supply.
Nope.
Material costs are high.
Yep.
We don't have the labor market to build homes. Commercial property, it takes 2 years to get something approved and up out of the ground and ready to go. I don't know that it's quite that long in residential, but it ain't just flip a switch, build a house.
Mm-hmm.
So even as the housing market cools, there's a lot of people on the sidelines wanting to get in. There's a lot of people wanting to sell and upgrade. So you're on this teeter-totter. Is the point to just get on the teeter-totter?
Mm-hmm.
And stop trying to time the market?
Yep.
Get in and start building that equity.
Exactly. Get in and start building the equity.
Yeah, love it.
People that did not buy 2 years ago are regretting that they did not buy 2 years ago.
Yeah.
Right?
And are you a fan of what's the saying? Buy the house, date the rate.
Marry the house, date the rate.
There it is.
Yeah. Yeah. I mean, you have to be comfortable with the payment. Period. End of story. Right? Look at the payments. People get caught up in the interest rate thing. What's your rate?
Yeah.
They think it's like a thing like, my rate's lower than your rate. Like, who cares? Like, can you afford the payment?
Right.
That's the key. Right? If
There's always opportunity to address that with a refi.
Down the road.
And
sure.
you can help with that.
But here's the thing, like, yes, a refi is expensive. Right. In my career, I've probably talked more people out of refinancing than talked into. Now, in 2020, 2021, right? It just made sense for everyone.
Right.
Rates were incredibly low. It made sense for everyone. Now, if I show you the cost of a refinance versus how much you're going to save per month, if you're only dropping 1%, you're probably not going to be super impressed. Right.
If you can save 2 or 3,
that's different.
Or more.
Sure.
Yeah. And again, that's where a pro really helps.
Yeah. But I mean, and then refinancing, like if I helped a client, last month, they had a first mortgage, crazy low interest rate, but it was only like a small, like 80,000. And then they had a second mortgage that was twice that much, like 150,000. But the interest rate was 7.5%. And then they had credit card debt of 50,000, right? Credit card rates are
17.5 to 34.9.
Yeah. Right. So I have a blended rate calculator that I can use. I put in specifics, this, and it came up to refinance all of that, or what their average rate they're paying now was higher than if I would have refinanced them and did a cash out. So that's what we did. We did a cash out refinance. They have plenty of equity in their home. They still have over 50% equity in their home, right? Got rid of all that high interest rate, took it out over 30 years. Now they have a very manageable monthly payment. If they want to put extra money on the principal, they can, because there's no prepayment penalty.
Yeah.
I mean, there's if you're out there and you're in that situation, you have a first mortgage and a second mortgage and debt, let's combine it all.
You can help. Yeah. And I'm sure you had a conversation with that person. Now let's be good with this financial opportunity we've just reset for you. Right. I mean, look, adults to adults.
Right.
Holly's not your mom. She has a family of her own.
Right.
That she plays mom with and is a great mom with, but she'll give you some great advice.
Yeah.
But you have to obviously be a responsible person. But that's a great advantage you gave that person. That's, for some, that's crushing debt. It sits on them mentally.
People get caught up in that. Oh, but I have this first mortgage of 3%.
But
let's look at what you're paying interest-wise on that other stuff.
30% on 50 Gs is a lot of money.
And this is only a third. You only have a third of it at that low rate.
Yeah. Holly, this has been great. We're on overtime.
So fun. Overtime.
Yeah, we're on overtime. So let's blaze through Connection Cocktail.
Okay.
And then we'll wrap it up with Sleep Better Tip and our testimonial moment.
Okay.
All right. You want to kick it off?
Yeah, sure. Music or podcast? What are you listening to on a long drive?
Podcast.
And favorite podcast besides Lancaster Connect?
Yeah, besides Lancaster Connect. Yeah. I like listening to mortgage industry stuff, Housing Wire, mortgage marketing.
Those are my favorite as well.
Yeah. If I just want to have fun, I'll listen to, I like Armchair Expert.
Okay.
Yeah, that's a good one. And if I want newsy stuff, I'll listen to The Daily,
Okay, cool.
I like Harold's Underwriting Experience podcast.
Chris is a producer on that one, actually.
He falls asleep all the time. If your friends had to describe you using one word outside of work, it's that one word.
Fun.
I agree. I concur.
Word.
If we had to have a phrase, barrels of fun.
Aw, thanks, guys.
One local business you love supporting that people should know about.
Gardner's Mattress.
Well, I mean, okay, yeah.
Duh.
One other
Oh, okay.
business.
I love Coffee Company.
Oh, yeah. They've got a bunch of locations around.
Yeah.
Good breakfast, great
Yeah.
coffee. Yeah.
Lunch.
Yeah.
Mhm.
Is there a coffee recipe, drink that you like?
I'm a pretty plain vanilla latte gal. Yeah. Sometimes I spice it up with a chai latte.
Yep.
Kick it up a notch.
Kick it up and
Love
up.
it. Yeah,
Podcast.
they're great company.
You have a chai latte when Harold and Roz are giving you a hard time.
Yeah.
All right.
Yeah.
Holly, this has been a lot of fun.
So fun.
I think we delivered on our promise to build great content for Lancaster. You learned some stuff today. If you're going through a divorce, you have a certified professional to help with that. If you got some debt, you can blend out some different refi options, or maybe not. She'll give you guidance there, help you get that home in this competitive market as a new buyer or a seasoned buyer. Somebody you can trust that costs nothing to begin having a conversation with, and you can connect with Holly in all of the show notes, and has great support behind her with New American Funding. But it's 717 Holly Lyle. Well, it's actually 717-951-3943. Okay. But the point is, it's not some 1-800 corporate number.
Right.
You're going to get an answer, and you're going to get the answers when you need them. And if you're in that hot market, I'm sure Holly's on speed dial ready for you if you need it. So, Holly, loved having you here. Thank you.
Thanks, guys.
Yeah. All right, we're going to roll into our sleep better tip. And so mine is something that is rooted in sleep science, and it's that you want to be sleeping in these 90-minute intervals. So let's just say you're somebody who can sleep effectively and feel good and refreshed for 4.5 hours. That's a 90-minute interval, 90-minute chunks of time stacked up to 4.5 hours. Your next interval is then 6 hours. And your next interval after that is where I'm at 7.5 hours. And then 9. And then, 10.5 and so on and so forth. So understand first how you feel within those 4.5, 6, 7.5 hour intervals. The myth of 8 hours a night is actually just that. It's a myth. You're waking up in the midst of a deep sleep cycle, which is why you might wake up feeling groggy. So what do you do with that? You either go to bed a little earlier or a little later, set your alarm a little earlier, a little later. So you're within 4.5, 6, 7.5, 9 hours. 10.5 hours if need be, 13 if need be. Maybe you're sick. So that's the thing. If you've been sick, doctor's saying get more sleep. That's the trick. Don't just get 11. Don't just get 12.5. Get those 90-minute intervals. So that's my sleep better tip for you. We'll send you that and many more with our sleep better book. Go to gardenersmattressandmore.com /sleep-better.
Nice tip. Testimonial time. For Gardener's Mattress More, got one of these handwritten testimonials that came in over the weekend here. Mildred is the customer, and Mildred has already mentioned to friends and family that I bought my mattress at Gardener's, and almost everyone I spoke to has already purchased their mattress from Gardener's. So that means,
amazing.
Yeah. So that means that we're impacting not only Mildred's life with a great night's sleep, but it seems like a lot of her friends and family are already aware of and realizing better sleep from Gardener's Mattress and More. So I thought that was interesting that came in there. So Mildred, thanks for helping to spread the word. And of course, thanks for being a Gardener's customer and saying some kind words about us.
Yeah, that's our barometer is moving from helping you.
Yep.
We're always going to have that in focus and have a 5-star experience. But if we haven't put the passion of sleep and Gardener's Mattress and More excellence in you to share it with your friends and family, then we're failing you and we're failing the rest of Lancaster. And so that's something we're very focused on right now here. So Mildred speaks to that. So thank you, Mildred. All right. That's our show. We're in overtime. We're going to wrap it up. I think we did a fantastic job. Holly, thank you again for joining us. We really appreciate you.
Thanks, guys.
And we'll see you next time on Lancaster Connects. Take care.